Hi everyone, this is Dale Henderson from Pilbara Minerals. Can't wait to have a chat with Tim on Euroz Hartley's Finding the Front in a minute.
Welcome to Euroz Hartley's Finding the Front, where we get to know the people who front some of Western Australia's leading companies, providing you with real insights into the way they think and approach things, both in business and in life. So get the volume adjusted in your car or your headphones sorted and settle in for a great story. Here's your host, Tim Banfield.
Welcome everyone to the final episode of Euroz Hartley's Finding the Front for 2024, our Christmas episode, and what an episode it is. As always, for those of you who are not familiar with Euroz Hartley's, we are a proudly Western Australian diversified financial services company that specialises in the provision of institutional sales, corporate finance, targeted research services, and of course, private wealth. If you would like to learn more about Euroz Hartley's, please don't hesitate to contact us or visit our website at www.eurozhartleys.com. On behalf of all of us at Euroz Hartley's, we wish everyone a very Merry Christmas. And thanks a lot to everyone who has listened in to Finding the Front this year as the podcast goes from strength to strength. Don't hesitate to send it on to your friends if you love the show, and we look forward to bringing you some more great episodes next year. Well, this special guest we have on this episode, our last for the year, is an absolute leader in his field. Our guest is none other than Dale Henderson, the Managing Director and CEO of Lithium heavyweight Pilbara Minerals, stock code PLS. Dale grew up in New Zealand. He absolutely thrives on a challenge and loves what he does for a living. His career has a common thread of growth companies and resources. Dale provides a deep dive into the challenges and opportunities of the lithium sector, and it really is so insightful. So, without further ado, it gives me a huge pleasure to introduce to Euroz Hartley's Finding the Front, the Managing Director and CEO of Pilbara Minerals, Mr. Dale Henderson. Welcome, Dale, to Euroz Hartley's Finding the Front. It's so good to have you on the show.
Thanks, Tim. Thanks for having us.
Oh, good on you. Look, I know we're at the back end. It's the Christmas episode, and you're on the home stretch, but you've managed to squeeze us in, so we really do appreciate it.
Thank you. Thanks for having us.
Good on you. Dale, as we've discussed offline and that sort of thing, one of the key points with Finding the Front, which we really enjoy, is learning a lot about the corporate leaders within Western Australia, and you're certainly one of those. Massive effort leading Pilbara Minerals, and you've done for some time. But just to look back at how you got there is really quite interesting. And I did a little bit of research around it, and it's amazing that you are a proud Kiwi, and you're from the beautiful little town of Timaru.
That's right. I normally keep the Kiwi thing a bit undercovers, but yes, I'm a Kiwi.
No, it's great. Well done. So tell us a little bit about growing up in Timaru.
Yeah, well, Timaru is a smaller town, and it's on the border of two of the sort of bigger rugby provinces being Otago and Canterbury. So we were on the borderline. Another rugby-loving city, as is all of New Zealand. And, that's where I went to high school and grew up.
Did you play rugby?
I did, socially. It was a bit of an expectation at the school I went to.
And look, did you enjoy primary school and that sort of thing? You embrace it?
Yeah, of course. I think school was fine, and our high school there at Timaru all went well. Timaru Boys is the school there. At the time, they adored sport. It was always the first matter on the agenda of the assembly of how did the first 15 go on the weekend, et cetera, et cetera.
Yeah.
And, in later years when we got to uni, we used to sort of joke of, how do we actually get to uni, given that focus on sport from the school we came from.
What about academics? Did you find it easy?
I was okay. I did okay at school. I was, not top of the class, but I was up there. And academically, did okay through school, and of course that got me into uni, where I fared pretty well there as well.
Well, fared pretty well is I'd say a fair bit of an understatement. I mean, to start with, I suppose when I look at your schooling career, I noticed that you're a prefect and a house captain. So you clearly had a bit of leadership potential early in life. Did you enjoy that part of school? And I suppose the follow on to that is, did you know what you wanted to do when you were leaving?
Yeah. No, I sort of grabbed any of those leadership opportunities as they came along. Prefect came with additional clout and privileges, which was always good at high school. So that was part of the draw card for that. But yeah, certainly, embrace school life and those leadership opportunities were of course a good setup for future years.
Yes, Dale. It's quite well documented that your last year at school was clearly a successful one because you were awarded a scholarship that was quite pivotal in your life, as it turns out. It was awarded by it was a national scholarship awarded by the Keystone Trust, which was originally the Graham Bingham's Property Education Trust. But I was reading an article written by the trust, and it was quite interesting how they described the impact. Well, they'd interviewed you and the impact that it had on your life. But the final paragraph was of the article I thought I'd just talk to is that it quotes here, he looks back to Timaru and remembers where it all began. When I reflect on the scholarship and the role of the trust, it has had an enormously positive impact on my life. I'm incredibly grateful to the trust and those connected to it. Tell us a little bit about that. What was the impact?
Yeah, no, it was, look, I didn't think I was going to get a scholarship. I remember the last year of school and reading myself for university and we all sort of gathered whatever scholarship applications were possible. There was a handful available, of which this was a particularly attractive scholarship, which I didn't think there was any chance, frankly.
Yes.
That was going to work out. But, lo and behold, I was successful. It was quite a full-on process, which involved, flying up to Auckland and panel interviews and that type of thing. And it was a sort of a 4-year type scholarship, which certainly covered all the tuition fees. So it was certainly material. And, obviously the award to me was a big surprise. But it sort of awoken me to, maybe this will be okay, and these guys are backing me.
Yes, and gave you a confidence level.
That's right.
Is it something that you sort of not so much was missing, but you just sort of thought it reinforced that there were opportunities for you that lay ahead?
Yeah, definitely.
Yeah.
It just opened my mind, and it brought me into a different circle of, it was all new. So the industry's connected to that scholarship, the people involved. These were your business leaders who are running the biggest property companies in New Zealand and some of the engineering houses, et cetera, et cetera. So sort of overnight I started to meet, shake hands with very, very successful business people. And so that sort of expanded my awareness geometrically, which was pretty amazing.
So that flowed into the university and that scholarship enabled you to go to the University of Canterbury?
That's right.
Yeah, and for the listener, Dale did reasonably well. He graduated with a Bachelor of Engineering with first class honours. So you clearly did embrace academics.
Yeah.
You really did get stuck into it and enjoyed it.
Yeah, I don't know about enjoy. I had its moments. I was pretty determined to do well and worked hard and I worked with a great cohort of students where you'd lean on each other and help each other, and that all went well. And as those years rolled on, I just got really, really determined that I wanted to leave with first class honours, and I was fortunately successful to do that.
So coming back to it, after getting the scholarship and understanding a little bit about building, engineering and that sort of thing with that first class honours, did you really know then, right, I'm going to look for building opportunities, project-driven opportunities, that sort of thing when you left uni? Because I'm sure you would have had options.
Yeah, I probably going into uni, I wasn't sure what it is I wanted to do, and I just knew I liked building stuff, and I enjoyed the thought of scale sort of builds and production, And it was for that reason I thought about getting into engineering in the first place. And
Yes.
so off I went to uni, and by the end of uni, as it related to which pathway to take, I didn't have a view really, and but I thought going to a broad-based engineering consultancy is probably a good start. So I didn't have a particular pathway in mind, but ultimately I ended up going with a company which gave me more diversity of experience.
So you ended up with a New Zealand engineering company called GHD, and was that a broader sort of mixed in engineering consultancy style of organisation? Yeah.
So GHD is international, and they have a large presence in Australia, and certainly back then they've got they had a very large position across the market, and that role was actually at GHD's first office, which was opening in Christchurch. So I was their first graduate, and the gentleman who employed me was the former CEO of another big consultancy who'd come into the frame for GHD for the purpose of growing their business, of which the Christchurch office was their a key centre. And I was their first graduate, and took up the challenge. It was very uncertain what I'd be working on, given it was a new office, and I ended up working on all sorts of different projects and tasks.
That would have been quite exciting.
It was, plenty of variety.
Yes. So what did you take out of that? Just a great foundation in terms of setting you up for further roles?
Yeah, definitely. I think the diversity of experience was great, and the fact that it was a small office meant that it wasn't too layered, and it meant that I ended up being in meetings with some of the very senior managers he had employed, and got to watch them in action and watch them work through and wrestle with really big projects, big problems, working with the client. So it was looking back, was a sort of a fantastic learning ground.
One of your influences in that role was a gentleman called Derek Crombie, ex-CEO of Montgomery Watson, and he had a bit of an influence of you in that role. One of the things that I took out of it was your advice. The advice he gave to you was always focus on delivery, get delivery right. The money takes care of itself.
That's right.
Interesting.
Yeah. So Derek was the one who employed me that I mentioned for that role in the office, and he was very much at the back of his career, incredibly well respected in the industry, and he really took me under his wing, and he taught me many things. But one of that was the point you raised there, that he impressed on me early on that delivery is king. Just focus on delivering well, and he'd say the rest will take care of itself.
Yes. That after that role, you've moved to Australia. So, what brought that on?
Yeah. So went to Australia, chasing the excitement of bigger projects and the adventure to go abroad, and which was I got all of that in spades, ending up in one of the iron ore expansion projects where I spent a bit of time, and then I moved again off to the Middle East.
Well, in Australia, did that provide you sort of insights? You landed up in the Pilbara, didn't you?
That's right.
Yeah, in Newman?
Yes. Hope Downs one. So I got to be involved in the initial construction of that project and into the sort of the ramp up phase. So it was an indoctrination into FIFO work in the Pilbara and everything which comes with that. And it was another fantastic learning ground.
It was a stark contrast to Christchurch.
It certainly was.
How did you handle the heat when you first arrived?
Yeah, a bit of a shock to the system, but I think everyone goes through that.
Yeah.
Before you know it, I was acquainted with it.
And then off to the Middle East for Oxy Petroleum or Occidental Petroleum.
Yeah, that's right. Yeah, so
that would have been an amazing experience.
It was, and I had it in my head that I wanted to be in the oil and gas industry for whatever reason, and I was always drawn to the potential of the Middle East, having known a little bit about the incredible growth and development, et cetera, et cetera. So I had an opportunity to go there, care of my former boss who I'd met in Australia, who I was working for, had moved to the Middle East, and he needed help. He was in charge of a large-scale expansion of an oil field project in the desert of Oman. And, he called me and said, look, Dale, we need a bit of help here. The expansion's not keeping pace with the drill rigs. Can you come and help? And I said, when do I go? When do I arrive? Let's go. And he went on to say, but look, I can only convince my boss to give you a 3-month trial because you don't have any oil and gas experience. You're unproven. And so, but, who knows? If you get here, you do 3 months, well, we'll see where it goes. So that was actually the start of what ultimately became a multi-year stint. And, I sort of arrived, really ready to prove myself and demonstrate that, this is a good hire and I'm here to stay. And that's actually what played out. And, it was a really formative couple of years of my career where I was just throwing bigger and bigger challenges, both not only in project expansion but also in operations and engineering.
Yes.
And I grew with that challenge and, just loved it. A really, really intense period. Working in, frankly, the middle of nowhere. Back then, there was no rostered day off, so you'd work actually weeks at a time. So, looking back, I don't know how we did it, but really intense period. But as I say, just learnt so much, not only about engineering and hydrocarbons and process, all that sort of stuff, but lots of team leadership stuff, culture. Yes. It was a cultural melting pot out there. We had it was Omanis, of course, being the locals, but we had Pakistani, Indian workforce, and the expat team was a mixed bag of United Nations from all around the world. So through all of that, there was all sorts of cultural challenges, which, frankly, that's actually what I learned the most about. It was more about the cultural challenges than people, whereas I went there thinking, gee, I'm going to learn about engineering and hydrocarbons and from an oil and gas producer. That's what, and I did learn that, but it was actually the other side, which that's actually what I learned the most from.
It was a pretty rounded experience when you think about it.
Yeah, definitely. It set me up well for years to come.
Tell me what you took out of that team part of the learning experience, because it seems to have resonated with you as well when you look further forward.
Yeah, I think, that period, as I said, was formative. And as it relates to people and leadership, I think, the learning there was, we're all the same. I think we know that, but it's funny how we all lose sight of that. And in that particular situation we had out there was many different cultures. It was really a first principles learning experience and what's required to lead people and to, lead actually a big group of people to achieve big outcomes. And when I say sort of first principles, a lot of the people we're working with, well, you couldn't actually speak to them, couldn't actually speak the language.
Yes.
So, some of the things we had to get into was, how do we enroll the workforce? How do we get language right? How do we set them up to succeed, et cetera, et cetera? And this was all interspliced with all sorts of cultural requirements. There would be certain religious holidays which would jump up and surprise us, which we had to cater for, and we had at times between some of the different cultural factions, tensions would emerge.
Yes.
And within the Indian subset, the caste system that they have actually presented some challenges. So all of this was sort of playing out. And bringing it back to your question, it's about listening, it's about good communication, it's about enrolling people, about setting them up for success. So it was a very acute situation which required that you had to do a great job across each of those dimensions, which in other more Western-based environments, I think we take some of these things for granted, but in that particular environment, you really had to work hard to get those foundational pieces right. And I think it's because of that particular environment. I think looking back, I learned a lot,
yes,
which ultimately equipped me with some skills which I then used later.
Yeah, and you carried with you. So you were there for around 5-6 years?
That's right.
Yeah, yeah. And then you decided to move back to Australia. Was there any reason for that? You just thought, right, I've done enough time here?
That was pretty much it. So I'd had a fantastic couple of years out there and really moved up the chain, growing with the growth that occurred out there, both in projects and operations. And it just felt time was right to move on. And it was it wasn't the easiest place to work too, by the way. It was literally in the middle of nowhere. It was looked like a desert in all directions, very hot, very dry. And I thought time's right for a new challenge. And so I thought, okay, it's probably a good time to transition. But before I sort of took another role, I thought, I probably should go and have a bit of an adventure. So I did take a bit of time off there and did some climbing and mountaineering, and did a lot of travel globally, and which was a fantastic period before I re-entered the workforce, which was back in Aussie.
How old were you then?
That must have been late 20s.
Late 20s, yes. So you've had quite a foundation when you think about your time in Christchurch with GHD, and then moving up into the Pilbara, doing a bit of work there at Hope Downs, and then going into with Occidental Petroleum and that, what is very formative. Coming back into Australia, what sort of a role were you looking for when you decided to come back with that skill set in mind?
Sure. So at this time I decided I'm a hydrocarbons guy.
Right.
My time in the Middle East, and I had a fairly firm view about that. So as I came back to Australia, I was most interested in those roles, and as it turned out, and I'd still been actually liaising back with Oxy about the potential of going back to the Middle East, but this time in Muscat, in the capital of Oman, which is a potential opportunity. But as it happened, I ended up having sort of 4 offers all at the same time, including going back to Oxy. One was actually with BP, one with Worley, Parsons, and another miner, all sort of landed. And out of all that, I decided to actually go with the Worley Parsons opportunity, and the sort of the promise there that I'd had with Worley's was they said, well, gee, Dale, we'd like to put you on the one of these hydrocarbon programs we've got, but we've just signed up a contract with a growing miner. We really need someone to help us out with it. Will you go and set it up? And I said, oh, look, I really want to get back into hydrocarbons, but, if that's what you'd like me to do, I'll do it. So this was my entree into FMG, where FMG was at the T45 level. They were just starting the T155 project, and Worley's were supporting that, and they needed some help with the port expansion component. So I mobilised to that. So this is, again, another sort of 3-month commitment. That ended up being 2.5 years.
Is that right?
and a bit like my time at Oxy, I just kind of grew with the project with that as well, and obviously really enjoyed it.
Yes.
And I had a blast. And again, it was another one of these intense experiences. In FMG's case, they, as you know, they needed to get things built and operational rapidly. That was the mandate, and I thrived in that environment.
You said that was all under the banner of Worley, but you were doing the job for FMG. That's right. You obviously did a pretty reasonable role there, because you ended up joining FMG. Yeah,
that's right. Yeah, so after that stint at Port, I worked. I was seconded into Chevron for a period, and then I was approached by Peter Mears, the Director of Development for FMG, who had, got to know me from afar, and Peter was, really the chief architect for a lot of the expansion that FMG did, and someone who's, he's got incredible standing in the industry and well respected, and certainly I looked up to him, and so when Peter called me and said, look, Dale, we've got this new project coming, we'd like you to run it, I'd like you to come and work for me. I thought, gee, I can't say no to that.
So you were project director? Correct, for the Iron Bridge magnetite project.
The very first phase. So they just secured the agreements with Formosa for that, and the idea at the time was to do a first phase, proving up a lot of the technicals, then ultimately to do the larger project, which now is built and operational. But as it turned out, of course, I'd sort of come in to deliver that project, and we built it just in time for the real iron ore downturn, the real crunch that occurs. So that put that project, in the freezer effectively for a few years.
Yes.
Which of course I moved on and within FMG and did other things, and then ultimately that project got restarted quite a few years later, which is brilliant to see that come to life.
when you look back at the time with FMG, because it was the last role you actually had, we're talking about sort of 2013 to 2017, is the last role you had before you actually joined Pilbara. And I'm just wondering, sort of, had you reached a point where you were thinking, right, I'm looking for a new challenge? Is that what really could, because you'd completed some of these projects and you were looking to build something again?
Yeah, well, there's one other chapter at FMG that I segued into an operational role, working for the Director of Operations, and that this was to support the business with the cost out challenge,
right?
That occurred with that really, really severe price drop.
Yes,
which at the time for FMG was obviously mission critical given the debt burden at the time. So I was charged with supporting laterally across the operations in terms of cost out. So another deep operational role. So that was and really challenging role. But again, I enjoyed it, thrived on it, and having completed that sort of chapter, I was at the period where I was like, yeah, okay, I'm ready for a transition and another challenge. And yeah, as I came to sort of a natural end of that sort of role, started to consider elsewhere, and coincidentally I was pursued via a headhunter for a senior role in another mining company, which was a really great role, but in my view it was a bit of a safe bet. And coincident with that, one of the directors for Pilbara approached me and said, "Oh, look, there's a small lithium company starting out. What do you think about going to a small end of town?" And I said, "Why not? Let's have a chat." And he goes, "Oh, you should meet Ken." And so I caught up with Ken, and that was really the start of my Pilbara chapter, that's where I am.
Unbelievable. So you had an opportunity to go to a big gold miner or a small startup lithium explorer.
Yeah.
That's really in a nutshell. So if I take a step back, when you look at your career, it seems like so far it's been a sequence of growth companies, project-driven, building things, all the things you sort of designed your life around when you were at university. When you looked at Pilbara versus going to an established gold miner, did you just see challenge written all over it? Because I can tell, Dale, you really just do actually thrive on a challenge. It seems to be coming through loud and clear.
Yeah, no, I think that is the common thread, and I think coming up to that juncture, I think that was actually the divider and of the two. Was on the one hand was a really good job, tier one company, fantastic, but here was this little upstart, which I could see I could just help them a lot with some of their challenges, and I thought, I could make a big impact here, and that really excited me. And but I didn't know lithium, I didn't know what spodumene was or anything like that, so there's a whole bunch of unknowns too, and things to learn about. So which that drew me actually, and so there was an element of the technical challenge as well, where I thought, great, been involved in all these other sorts of commodities, different processing techniques. I wonder what this is all about. So that was part of the draw card as well. And plus, of course, meeting Ken and the guys and the team there, I just could tell, I'm going to enjoy working with these guys.
Well, what a team. And that was the start of a pretty formative period of time for the business. It's a good way to just segue now into your time with Pilbara. And what would be good to do for the listeners, just to go back in time a little bit and just talk about how Pilbara Minerals began, and then we can just go into the current modern day position and discuss the current climate and where we're going. And I suppose with keeping that in mind, the mission of Pilbara Minerals is to be a leader in the provision of sustainable battery materials products.
Yeah, sure. So it's probably worth starting really, really big picture in terms of what we're witnessing globally in terms of the emergence of new tech and the energy transition shift. Pilbara, being a lithium group, is a manifestation of serving that growth market. And although EVs are talked about day in, day out, it wasn't that many years ago. And in fact, at the time of Pilbara, there was bugger all, frankly, being sold anywhere.
Yes.
So around 2014, the business got founded by the founding geos who were actually on the hunt for tantalite of all things. And as the story goes, chatting to John Young and Neil, they went off to the first lithium conference they'd attended at that time, which was attended by the buyers of lithium at that moment in time, which were ceramic buyers. They weren't battery makers, it was ceramic buyers.
Yes.
They heard the ceramic buyers going, gee, there's this thing called the lithium battery. This might be a competing buyer. And so that was only in 2014, so not that long ago. But to John and Neil and the team, they thought, gee, we actually might be onto something. Now, to put that in perspective, 2014 global EV sales were something like 300,000 to 400,000. Now, fast forward 10 years, we've had more than 15 million cars sold this year to date, just through to November, which, by the way, is a 32% increase on EV sales from last year. So that's more than a 40-fold increase in 10 years. So you're seeing this mass emergence. So if I jump back to Pilbara, 2014, they were at the start of this. So lithium not really well that known, certainly on the outer orbit as it relates to commodities. Come 2016, they employed Ken and the guys. Were successful in raising the first funding to kickstart the project.
But just pause there, Dale. So basically what you're saying is it was 10 years ago that they dropped the first drill hole in for Pilbara.
Yeah.
And look at those stats you just reeled out. It's frightening.
Yeah.
The growth. I mean, it is quite there's a lot of foresight involved there by the original five, wasn't it? 5 geologists?
That's right. Yeah, look, I think they would call it a bit of foresight, a lot of hard work, and a good dose of luck. And I think those 3 attributes have persisted through the journey of Pilbara. It's been hard work. We'd like to think good foresight, but we've had our moments of luck as well along the way. All of that's come together, and fast forward today, well, we're an ASX 50. We're roughly 8% of the global lithium supply. So we've sort of emerged in service of this amazing growth market. So it's been a hell of a journey.
So you just to go back, you were with Ken and you decided you had to do the first raise in 2016.
That's right. So I come shortly after that in 2017. Yeah, so I started, and the mandate was you steward the build and bring it into operation, and we did that, and that was just in time to go headfirst into the first sort of lithium downturn, which was principally a function of Chinese subsidies, because China was the demand engine at that time. China pulled back their subsidies. That actually collapsed the market. So a real fight for survival during that period. It was tough to bring the project online. Operating these lithium plants is incredibly challenging. A lot to learn there, and then to head first into a very low price environment almost broke us, almost killed the company. But we managed to navigate that period through some careful financing, a lot of cost reductions, those experiences from FMG, etc. That all came to good use again, and we managed to wade out the storm to get to the other side. And we went from sort of this worst storm to a perfect storm, where a bunch of factors came together in a positive way. So post-COVID, we had the combination of sort of global stimulus for EVs, the mass push for energy storage, the green transition, all of that sort of came together. Plus, by that point, the product types for EVs had got better and got cheaper, and so are naturally getting picked up. So the demand story had gone from a China-centric sort of story to a global story. And this is what fueled this, rapid price rise that we saw through 21, 22, of which Pilbara was, a real benefactor of that.
Yeah.
Which we were able to get on and start paying dividends and investing back into the base. And by this point, I'd stepped into the role of CEO. So it was sort of coincident with this massive price escalation. So a real baptism of fire for me as company went from this struggling minnow into all of a sudden a very profitable company that was being looked at by shareholders to hurry up, get on with growth and capitalise on this amazing market.
It's fascinating. I was reading when I was sort of doing some background, there was a fantastic article written in the AFR by Brad Thompson. It was in September of this year, but you're quoted in that article about that time. In 2017, the sky was bright for lithium, and by early 2018, the sky was very bright. Pilbara's share price rocketed to $1.20, and we thought, how good is this? It started to go down from that point forward, and we went into the first lithium winter, he says. And then Brad's gone on. It got so bad that mining stopped unless there was an order to fill. Office workers rang a bell every time an order came through. By 22-23, the orders were so big and the prices so high, they needed a new office calculator to crunch the profit numbers. Pilbara Minerals made a net profit of $2.4 billion that year when the average price a tonne for spodumene concentrate from Pilgangoora was US $4,447 and the company paid a maiden dividend. Unbelievable roller coaster.
That's right.
Which is what you're saying. You know, that experience with FMG where you're cost cutting and looking at ways to preserve cash through to that price increase. But when you look at it, your background's come to the fore here, and obviously you've done a good job in the COO operating with Ken and Tony Kiernan's the chair through this period.
That's right.
Shout out to TK. You know, that period of time was just fundamental in terms of where you are now and how you've got there.
Yeah, that's right. No, I think, I think you're looking back, there's a lot of learnings from my career which have been really helpful for the Pilbara period, which has been great. And then during this period of, you know, the lithium journey I've had with Pilbara, that downturn that we suffered and the learnings around customers and pricing and how to manage the balance sheet, well, that's been very formative as well as we went into that period of prosperity and we had decisions to make on how do we deploy our capital. And we've made different choices from some of our competition and very happy with some of the choices we've made because what it's done is it's put us in relatively very strong strength relative to others this part of the cycle.
Yes, okay. So let's just talk about, you know, where you are now, and I did spend a bit of time looking through your annual general meeting presentation, and look, there's a few things that come out of this that would be really interesting to dig a little bit deeper on. Tell us a little bit about what you're trying to do in this current climate and allowing for the growth that we've seen and the growth we expect, the current difference between demand and supply and price, and all the things that you've had to answer 100 times, Dale, but just give us a little bit of an insight because what I really enjoyed your AGM presentation from the perspective of it's a growth market and you've got the new technology, you've got the global energy shift and you've got the geopolitical forces at play. But I know there's a lot more to that, but that's just a broad overview.
Yeah, that's right. And probably, the place to start is just acknowledging it's a nascent industry going from a very small base. And because of that, it's been incredibly volatile. And we've seen some very high highs and some lows. But over time, obviously we expect that to level out, but probably there's going to be some more volatility as the market continues to grow and take shape. Now, volatility does not need to be bad if you're set up for it. And what we've done as a business, frankly, is set up for this wild ride, which is the market. If you look back in time, the highs have been fantastic periods of time for our shareholders. We've been rewarded handsomely and we're able to get on with the job of paying that back to shareholders. Now, high prices, of course, drive supply responses, and we've seen some of that precipitate in the lower price environment that we've had to date. But that's, of course, gone to lower lows, which are frankly unsustainable. So stepping back, what we believe about the market is we think the lithium market is a fantastic industry to be involved in. The structural drivers are incredible. It is here to stay, and the compounding growth rate, frankly, is phenomenal. You heard the EV stats before. Mass energy storage stats too, by the way, are shooting the lights out. You name it, those structural drivers are there. So long game, incredibly bright. Yes, it's been cyclic. It's had these ups and downs. Now, what does that mean for Pilbara and how we think about managing the business? Well, first and foremost, it's about the balance sheet. So we've taken the view that we want to make sure we've got an incredibly robust balance sheet such that we can weather any of these storms. And that's exactly what we've done with a balance sheet of more than $1 billion to date, plus during the course of this year, we secured an RCF to the tune of another $1 billion,
yes,
supported by top-tier banks. So, number one, strong balance sheet. Number two, be a great operator. Make sure we're on the left side of the cost curve. And within the business, that is just a burning focus about getting better and better at driving cost out and investing in the right capital to get us further to the left of the cost curve, plus innovating. So that's the next priority. Beyond that, of course, it's expanding the base so that we make the most of the incredible assets that we've got. Then it's about dovetailing those lithium units into smart downstream partnerships or projects such that we can extract more margin per lithium unit. And by the way, this past year has been, another milestone year in this regard. In fact, joint venture with POSCO for the hydroxide facility in South Korea is commenced production. So today we are a lithium hydroxide producer. Last priority on the list is ultimately growing the base, so stepping outside of our base asset of Australia and going offshore. And in fact, again, this last year, we've done exactly that through the Latin transaction to acquire a fantastic asset in Minas Gerais state in Brazil.
If we just go, and I'd like to get to that acquisition in a minute, but if we just step back and the way you've adjusted the business, let's just talk about that supply-demand imbalance that you went through. When you mentioned in the AGM it's about a 4% imbalance between supply and demand. That imbalance then went forward into a price rise which reached a pinnacle of $8,000 a tonne on a spot basis, right? That's just, according to what we were talking about, it's 4%.
Yeah. Yeah.
And that's all it was. And then you've seen a meteoric fall.
That's right.
Right? Now, the growth that you're talking about, are we likely to see that supply-demand imbalance come through again? And I think that's the question, because it can turn so quickly.
That's right. Yeah, that's right. So, as per the AGM presentation, what I sought to do was use the historic supply-demand balance as an explanation of the outsized volatility we've seen in pricing. So that, as you mentioned, that last rapid rise where pricing, more than quadrupled the previous highs, was all care of a very small imbalance. And that precipitated the outsized rise. And equally, on the flip side, we've seen the same dynamic happen on the downside. So it's reasonable to expect that going forward we might see the same dynamics. Now, intrinsic to this mismatch is a market dynamic for lithium, which is a function of, again, being a very young industry, and that is the price discovery mechanisms are particularly immature. And because of this immaturity, what we see at times is a strong mismatch of pricing, both the highs and the lows.
Yes.
And the current pricing, frankly, is an example of that, where you see most of the supply side of lithium, frankly, is, they're losing money today. And so ultimately, we think pricing not only needs to rise considerably from where it is today, needs to move actually quite a lot higher before we reach an incentive price level such that projects will be invested in to support that demand side, which has continued to compound at a very healthy rate. So back to pricing. Yeah, there's a dysfunction, frankly, around the way the market operates, which is leading to this disconnect on pricing to the supply-demand balance. And it's probably not going to improve until, A, the industry has more scale, and
yes.
B, there is more mature trading mechanisms in place. And
the big question is, how long do you think that will take?
I think it's probably going to take a number of years. Now the market is maturing. So if I think back to 2017 when I started, the pricing mechanisms, there were 3 price reporting agencies. Fast forward to today, there'd be more than double that in terms of very credible agencies and many more sales, many more data points. So it has got better. Plus, there are things like the Guangzhou Futures Exchange in China, which has stood up over the last year to 2 years. So that's now in place. And there's other groups looking at installing their own futures contracts. I believe Fast Markets is commencing one. So there are steps of maturity underway. But I think where we need to head to is what you see in other industries where you've got a mature spot market and a mature platform that the broader industry utilises for efficient price discovery and more mature trading mechanisms. So I think that's ultimately where we'll head.
Yes.
But it might take a few years to get there.
So when I know we were talking about offline, but the battery manufacturers, clearly they are going to need more and more lithium to keep up with the demand that's coming out of the growth in EVs and the mass storage. Tell us a little bit about what you're seeing there, and I suppose it's a good way of bringing in your partners and the way that unfolds. Yeah.
So when we engage across the industry with the car companies and the big battery makers, likes of CATL, who's connected to one of our key customers, and CATL, by the way, is depending which year, the largest battery manufacturer globally. When we engage with these large groups who've got a global perspective, all of them believe the long game for lithium, and all of them are sourcing supply chain security and looking to build out their supply chains to capitalize on this remarkable industry. So, and this sort of opinion, I've been engaging with groups just this last 2 weeks, including across our full suite of customers. So that comes through loud and clear around this conviction on the long game. And so they are looking through this period of price volatility to capitalize on this amazing market. And why wouldn't they believe it, given those compounding growth rates? Now, what does this mean for Pilbara and across our partnerships? Well, we've got we really pride our partnerships. In fact, it's one of our key value statements around honouring our partnerships, given the birth and growth of the company was care of those amazing customer partnerships, financier partnerships, so on and so forth. But as it relates to our customers and JV partners, you've got several strategic partners in play, one of which, of course, is POSCO, I mentioned.
Yes.
The inception of that deal was 2018 with the view to jointly build a hydroxide facility in South Korea. That's the one which is turned on. This is all about supply chain integration, and it's all about maximising return for our shareholders. And we like the idea and time of growing that. So that's one sort of diversification pathway we've picked there. There's another one which was in the early stages of development, and that's with Ganfeng, where we've agreed a study pathway to ultimately move into a potential investment in another downstream plant. And now the logic of this is this crazy landscape, which is the emergence of the industry. It's a wild place. There's lots going on. So it's very unclear today where the winning supply chains will be, the winning battery materials hubs, and even the winning battery chemistries. There's a lot moving around. So what we thought was, we're probably best to partner with a like-minded partner and can pool our insights and our expertise to solve this Rubik's Cube. So cue the relationship with Ganfeng. So that's the idea there, and ultimately, if it goes well, we'll look to do a joint venture downstream somewhere in the world. So
yes.
Yeah. Outside of that, we've got a couple of very long-standing customer relationships, and we also have a joint venture with Calyx for the development of a midstream project at the mine site, which it's got the potential to be a game changer. So we're doing a bit of innovation with them as well.
This all leads to you've got the market, you've got the partners, and you're distributing product. Tell us a little bit about your consumers in terms of the end game. So you've got clearly the US and you've got China. Now, we were talking offline about how big BYD is becoming. Just tell us a little bit about that, and I suppose the challenge the legacy car companies have at the moment in terms of where they're going, and they're looking to secure supply as well.
Yeah. No, we're bearing witness to. It's a remarkable time in history as the world sort of pivots on energy around the energy transition, but also this shift in technology that you mentioned, particularly around the car companies. So yes, you've got these legacy autos who've had a presence for decades and an incredible position, who are trying to retool for the EV format, and now they're competing with the new kids on the block. The BYDs, the Teslas of the world, who do not have any of those legacy encumbrances. In fact, they're completely unconstrained in every respect, and they're going really, really well. In fact, I was just looking back at BYD's history. They only debuted their first EV in 2004, so it's only 20 years ago. 10 years ago, they were only selling 20,000 EVs. Fast forward to last year, when they became the world's biggest seller of EVs. There's more than 3 million EVs. So that's an example of, the new kids off the block jumping forward leaps and bounds, and that's the competition for the legacy car companies. And, look across the board, they are suffering. It's no surprise. Volkswagen has been in the papers recently. A number of German manufacturing hubs which are under pressure. Over to the US, we're seeing some pains across some of the big US autos as they look to retool as well. And I think over time it's going to be fascinating to watch it play out. I think we may see a changing of the guard as some legacy car companies can't retool fast enough. Some might, who knows, and no doubt there'll be the emergence of some new players as well. So all of this is playing out at the same time.
How does Pilbara position itself in this? So when you look on a global basis, BYD, where are they getting their supply from?
Yeah, so BYD, a number of these major suppliers have doing their best to have a diverse supply chain.
Yes,
because they understand the criticality is for their business. Depending which car company they're deploying different strategies. In the case of Pilbara, how do we think about this emerging landscape? Well, a lot of it, what we do is just driven by the fundamentals. So we think about the risk of not going too far down the supply chain, given it's unclear what car companies might win, it's unclear what battery makers might win, it's unclear what cathode makers might win.
Yep.
But what does seem to be more of a sure bet is the feedstocks for these different battery chemistries, carbonate or hydroxide. That seems a safe way to go.
Yes.
So then the question becomes, well, okay, what is the right partner to work with, and where is the best place to consider an investment proposition? So that's kind of the lens that we look through it. But the other broad principles we think about is, well, let's diversify, just because that's good business practice. So we've always had that as obviously a key focus. That's good for business. So diversify. Let's make sure we're working with the best in the business, and let's make sure from a first principles basis that we think that investment's really going to win because of the cost inputs, where it is in the world, and the other support it might have.
It's interesting because if you see what's going on in the US right now with the incumbent Trump administration and the IRA and his views on tariffs and those sorts of things, how do you see that will play out when you can see China just growing so fast? This is not just electrical vehicles. This is also the mass storage side as well. There's some fantastic statistics you've got in your presentation around that growth. But it doesn't cover off on that expertise that China has. Would they be able to transfer that ability to make plants and manufacturing facilities in the US as well? Or how do you see this unfolding?
Yeah. Well, I think it's probably worth the US gets a lot of attention. It dominates the headlines. And it's probably worth calling out that as it relates to the lithium industry, they're responsible for roughly 10% of the demand today.
Right.
So it's a relatively small component, but the market is an important future market. They've got the second largest auto market globally, second to China, and as mass energy storage takes off, of course, that's an important market. But by proportion today, that they're a smaller component of the subset. So that's worth everyone knowing. The other thing to keep in mind is everyone is transitioning. It's not just Europe, it's not just US and China, albeit they're very key markets. And what we're noticing is the EV uptakes and the rest of world category, as everyone else gets lumped together, is actually going forward in leaps and bounds. So this transition is taking flight across all countries and all manners, and there's very different approaches being deployed, which brings us to your question of how do we see it playing out, and what is the role of China, and how does that play out? Well, I think the answer to that is very, very country specific, and I think it's heavily influenced on the government-to-government collaboration and what's in place there. Now, as it relates to the US and China, I think there's some signs of some potential very, very serious integration and work together.
Is that right?
Yeah, and so what I'd reference there would be the relationship between Ford and CATL, which I mentioned, one of the world's largest battery makers. So they are looking to manufacture batteries onshore in the US for the Ford ecosystem. So as I understand, that's moving forward. so there's an example of that. If we jump over to Europe, evidence of Chinese manufacturing in Europe, there's a number of examples of that. So it looks probable that that could be a model moving forward, but only time will tell.
Well, it's interesting you say that, because that then takes us, if you've got a 33-year roughly mine life for Pilbara now, and now you've just acquired Latin Resources in Brazil, one question I would have is, and I know one of the pivotal things is you're trying to diversify your revenue streams. Why go again into hard rock over in Brazil and not look at the other options of brine or the like?
Yeah.
You know, I know you've got expertise in hard rock, and I'm sure that's where it comes in, but I was just curious.
Yeah. So, as we thought about, what is the first organic growth step outside of our base asset in Australia? And what we thought about there was, well, obviously we've got this core skill set in hard rock lithium processing, hard earned over the years, and a lot of what we've learned, frankly, we think is leading edge, and a lot of that's flowed through to the great results the team's delivering. So when we think about, how can we create more value? Your natural place to go is trying to leverage that IP and that skill set. So we certainly like the idea of that, but as I was at pains to reassure the market, we wouldn't grow for growth's sake. So it needed to be the right opportunity. It really all needed to come together in terms of the asset location, the quality of the asset, the support around it, the approvals, et cetera. Now, as it came to the Latin Resources project, as that opportunity presented itself, well, it all came together beautifully, both the things I just mentioned, plus the timing of that project, and the team that Latin has a fantastic team who's done an incredible job to bring a very fast-track project to life. They've done a fantastic job, and there was we were naturally drawn to each other as we got to know each other. So it all came together, and we think it's a fantastic outcome for both sets of shareholders, being an all-scrip transaction. Plus, we think it's got the potential to be the next platform of growth for Pilbara. So we love what we see over there, and looking forward to bringing that to market at the right time. But stepping back a bit and to the broader question of, why hard rock? Why wouldn't you go somewhere else?
Yes.
No, we're open to that. So obviously, the lithium industry, this is our wheelhouse, and this is what we know. We are not adverse to other sources of lithium supply. Obviously, the principal supply for the industry is either through hard rock or brine. High quality brines in the right domicile, we think, a fantastic thing to do. So in time, we've got an open mind to that. But of course, it's not our skill set. This is a new area. So if we were to go down that path, I think we would probably do it in a small way to ease into it. But to the concept of continuing to broaden the base, diversify our revenue streams through high-quality assets, and reinforce our position as a low-cost lithium supplier of scale, well, that could be a natural extension in time.
My understanding, and correct me if I'm wrong, Dale, but with brine, it's a higher capital-intensive structure up front, but then lower operating on the longer term, versus with hard rock, it's lower upfront cost, but a higher cost of operation on the longer term. Is that the way you look at some of these acquisitions? I mean, when you look at hard rock, you've clearly got that worked out, but would you look at brine from a cost perspective? Because you're obviously transitioning to try and be at the lower end of the cost curve on every step.
Yeah, there's a sort of a key nuance which is often missed in this discussion of hard rock source versus brine source. And what matters is what's the total cost through to the end of the chemical gate, i.e. what's the total cost through to the production of battery-grade hydroxide?
Yes.
And, what cathode chemistry are you serving? So why I reference this is hard rock is a very clean source of lithium units, which bodes well for the purification to the hydroxide gate. So this is why historically across a lot of the chemical producers, there's a bias to hard rock supply for hydroxide, because it's easier and lower cost all the way through to achieve those very, very high purity specs. And across for some of these chemical supply, they're worried about parts per billion. So it's getting to that type of level in terms of accuracy. So that's important. So it could be that, yes, the cost at the mine might be slightly higher, but it's then won in less processing costs through the hydroxide gate. That's in the case of hydroxide battery manufacturing. But that, of course, is to serve the high nickel cathode chemistries, higher energy density, different price point, et cetera, et cetera. But if I jump to something like LFP, now lithium carbonate is the feedstock for that, and the LFP battery, albeit a less energy dense battery, it can, as I understand, accommodate a less high quality product. In which case, a brine feedstock, or a feedstock from anywhere for that matter, would not demand the same levels of purification into that supply chain. So that's a key nuance, and added to that, and I appreciate this is a bit of extra detail. Yeah, the chloride route to carbonate is lower cost, but if they were to take that chloride route from brine to hydroxide, there's another processing step which would be a cost to hydroxide. So,
right.
Yeah. So what matters, to bring it back to the start, is the cost is all the way through to the battery to the gate of the chemical producer. That's actually what matters, and that's actually really the key comparator. So that's a little bit of the nuance around cost and what product are you serving. The other things which are really important factors are ESG factors, and as it relates to brine, you have some very high quality brines out there. They're high water usage, and there can be challenging environmental impacts to control and manage. On the hard rock side, obviously very energy intense, does not have the same water requirements, but of course another key thing to manage. So several dimensions have to be weighed up as you consider what's a great project and what cost point can you achieve.
Got it. And then that's why, obviously, Latin Resources was a logical choice to begin with, but keeping an open mind.
Yeah, that's it.
Yeah. So when we look at that, you've got Latin Resources is logically going to be a hub for the US over time. You've got Pilbara as a hub for Asia in the Southern Hemisphere. So when you see the next, and this is an interesting point when you look at now your role as CEO and where it's all going, you must be incredibly excited about the future.
Yeah.
You're clearly you've got cash preservation front of mind at the moment. 2 plants, one's turned off. Your midstream's in pause at the moment. But tell us a little bit about, from a strategy level now, where you're seeing Pilbara now, and keeping in mind we do understand that there's growth prospects. We understand the market. The pricing's just got to come back.
Yeah.
It almost, when you look at what you've demonstrated in terms of the market, that price transparency has got to come sooner than later, doesn't it?
It feels that way. I mean, something has to give. So demand side, it's compounding amazingly across what we spoke about earlier, and supply side, given the low price environment, well, that's a capital's run for the hills. So those next waves of supply aren't being invested in. Yes, there's some idle supply. So as we see some price appreciation, that might get turned on, but ultimately that'll get exhausted because supply side is not compounding at the rate that the demand side is. So it does set up what I think is a set of conditions where, yes, we could well have what we've seen in the past, where we've seen those price rallies.
It's quite exciting when you look at it. And I suppose going forward, with regards to the electrical vehicles, you've got the self-driving cars coming as well. And that's another ballgame.
No, it is. No, there's a number of emerging areas which are pretty exciting. So there's self-driving cars. We've talked about the EV uptake already going incredibly well. There's even other ones like you may have seen the planes, the EV tolls, so the little cabs with propellers, sort of the Jetsons type setup. That's actually coming along quicker than I think most expect. So one of the Chinese groups, Ehung, they're very well progressed, and in fact, I was reading that they're looking to do their first commercial flights in Thailand next year, in Phuket and Koh Samui. So this would be, you're stepping into your little propeller plane and it flying you short distance to wherever. So that's happening next year. Plus I see that they've delivered more than 20 units to some location in China. So obviously getting trials underway and going. So before you know it, you might be Ubering in a little plane.
It's quite unbelievable, isn't it?
Yeah.
The opportunity set is massive. Tell me, what do you see if the price doesn't move within the next foreseeable future? We come back to that question around strategy. So we know that the glass half full. If the glass is half empty for a while, how do you play that one out?
Yeah. No, this is, the strategic opportunity set for the company is just amazing. And so for myself, with the rest of the board, Kathleen Conlon, a new chair who took over from TK, what the board plus executive wrestling with is just an amazing smorgasbord of opportunity given the growth of this market. However, we have to contemplate the downside risk possibility that you mentioned. And in this regard, what we've looked to do is stack the deck in our favour. So first and foremost, it's about make sure we've got that really strong balance sheet. In the year just past, we've done lots of things which are all about ensuring that we're in the strongest position possible. So that's included sales offtakes with the strongest in the business, 2, strong balance sheet and reinforcing that further with the $1 billion R3F that we did. The capital investments we did have been about taking us to the left of the cost curve. So we've brought new trucks, we've brought new excavators. This past year we've got new trays on the trucks. We've plugged in LNG gas to reduce not only our energy costs but our carbon costs. So those investments that's going to all flow through to our reduced unit costs, which therefore serves the balance sheet. So it's the sum of those things I think puts us in a really strong position, such that if the new lithium winter is longer, well, we can weather that storm a lot longer than others. So that's really what we've tried to do in terms of managing the downside risk. Meanwhile, keeping our heads up and eyes out, looking for, okay, what are those right next steps of growth and when would we want to time those steps of growth? Obviously in no rush, but if we can capitalise on this remarkable growth opportunity, leveraging our unique position, our scale, our know-how, why wouldn't we?
Yes.
And as we are doing with Latin, well, why wouldn't we do more at the right time?
It's interesting. You've talked a lot about balance sheet there, but your capital allocation strategy, when you look in the past, has been your organic growth, your product expansion and that sort of thing. You've got then, you did issue a dividend when there was cash, a lot of cash, and then you also then made an acquisition. For the shareholders, though, moving forward, how do you see that capital allocation strategy in the two? I think you've just really outlined what it is should this price challenge maintain, but, should you see a swing, which we can't speculate on, but if the swing comes back like we've seen in the past, how does Pilbara navigate that capital allocation strategy?
So our business, of course, is highly tied to the prevailing price. So that correlation is direct. So if your pricing rallies, given our scale of production, well, that will flow through to the balance sheet incredibly rapidly, which is exactly what we saw in 22, where the proceeds flowing into the business were incredible. And you had the great problem of going, wow, we need to issue some dividends. Let's get going. Now, if that situation occurs again, well, of course we would, in accordance with our capital management framework, would be back to paying dividends. And it's going to be fascinating to see how does pricing change. But if we think back to the returns Pilbara yielded in 22, which were phenomenal, well, that was at half the production levels that we have today. So if pricing goes to half of what it was, well, we're doing double the volume now, so it'll be something similar to the same returns.
Well, it's exciting, Dale. It's very exciting. Okay, so look, I just want to move a little bit to the left here, Dale, and when you moved back to Australia, a really important event happened in your life, and you met your future wife, Galabinga.
Yes.
What a special occasion that was.
No, definitely. No. So, happily married, and Galabinga puts up with me, and it's no small task.
Tell me, has she got a view on lithium as well?
Well, yeah, she believes in the long game. Of course she would.
she'd hear a bit about it at home.
Yeah, she does. So, poor thing sits through YouTube clips of me watching about batteries and God knows what. But no, she like me, she sees the crazy, amazing future that it has. And yeah, it's a wild ride, and she's been riding each bump in the road along with me.
The ups and the downs.
That's it.
Yeah, yeah. Oh, well, shout out to Galabinga. Well done. Keep up the great work.
Yeah.
It's a question I often ask, but have you managed to be able to manage that work-life balance, Dale? You know, I know when you joined as COO, you worked with Ken and Tony and very closely, and you had a great team. When you went into the main role of managing director and CEO, did you manage to find a balance that, or is it just it's all in?
Yeah, look, it's it's pretty all in.
Yeah,
I think the idea that you can have balance, I think you're not a great outlook. I think it's you're sitting, if people are looking for work-life balance, you're almost setting yourself up to fail from the outset. So the way I've always sort of thought about it is, there's things in life which are just non-negotiable. You've got to prioritise, and there's moments, and there's the same is true in business, and you've got to think forward and think very actively around catering for both and giving a lot of effort and energy to serving both, and accept that life is fluid and you need to ebb and flow as required, not a choice of one over the other. So easier said than done.
Yes.
And certainly in the case of Pilbara, there's been incredible periods of intensity and which you just have to roll with and then make up for that and find ways, and equally there's times in your personal life which you just have to drop everything for and roll with that.
Oh yeah, look, thanks for sharing that, because it's definitely a challenging question, and there's no easy answer, particularly when you're in your role. I just wanted to generally come back a step and talk about, as you've grown up, there's a common theme in here that you've loved a challenge. Right now, moving out of uni and that sort of thing, you embarked on things like mountaineering, and I think that period of time when you went travelling, you've tackled the Himalayas, for example. You've done ultra marathons, and you've run the Rotorua ultra marathon, and
Tarawera, Rotorua,
and you've run one in Mongolia.
Yes, yeah.
So I mean, that's a typical mindset of someone who really wants to stress themselves out and have a crack.
Yeah, there's a bit of that.
Tell us a little bit about that.
Yeah, look, firstly, that's a few years ago now, so I'm not
up to it anymore.
Yeah, it's probably true. Yeah, no, it's it's sort of a chapter in my life where very adventurous and really up for the challenge, and whether it's mountaineering or the ultras, I'd classify it as I dabbled in it, because there's people who are real mountaineers who make a career of it, and likewise ultra runners who do ultras all the time. I'm neither of that, but I did have a dabble in both, and as it related to the ultra marathons, I was inspired by a mate of mine who had been running them and who I'd grown up with, and I just thought, I'll give that a crack, and Googled it and saw this run in Mongolia, and I thought, how amazing does that look? And I was especially more the attraction of getting to Mongolia, to be honest. But I hadn't run a marathon at that point, let alone an ultra marathon. No. So that was a bit of a steep curve.
Well, it's 100 kilometres.
Yeah,
I mean, it's not like it's 2 marathons and a bit.
Yeah, no, it's and there's actually longer ones as well too, if you can. You could give it a go. As it relates to mountaineering, same sort of story. I trekked, back in New Zealand and sort of got up to the ridge line and got to the snow. We couldn't really go any further. And it'd be nice to go a bit higher. And went and did an alpine course and just got more into it. And then when I had the opportunity to go to the Himalayas, I thought, how great would that be? Yeah, and so as I say, dabbled in it.
Yeah. Well, but it also teaches you a lot about yourself when you're at 80 kilometres and you've got to push through.
It does. Yeah, I think these in any endurance pursuit, whether it's a sport or a skill or maybe an instrument, has a way of you're stripping you down and stripping you back to what you're made of, and particularly for some of those endurance sports, you have to run light. You can't be carrying a big ego. You've got to go with the flow, and so I think through that process, you do learn a lot about yourself in a great way, in a way that arms you for other things in life.
Do you take that sort of medium to long-term patient approach in the way you manage?
I'd like to think so.
Yeah.
I think the thought of treating business like endurance is a helpful mindset.
Yes.
Because it's about the long game, and it's about pace, and it's about knowing that there's times of intensity and balancing that carefully, and knowing that there's times when it's going to be easier, and just not sprinting. Sprinting, you're out of breath before you know it. That's not sustainable.
No. Look, Dale, I'd love to keep talking because it's been fascinating. I could literally keep talking about what your views are on the world, and there's so much more we could cover. But I am conscious of time, and I will say you're very humble, and it's increasingly evident that the way you approach your business and the way you approach your life has been one of plodding along, taking every challenge as it's come, and you've got one at the moment, but you're also equally, you can tell you're quietly confident in the way you're approaching it, and it comes over, for the listener, it comes over very well with the way that he describes where Pilbara is at the moment, and the process you've gone through to get to this stage, and all the experience that you've got to reflect on through your times, learning as an engineer with Fortescue and that sort of thing. It's been some chat, but I will say that on behalf of all of us at Euros Hartleys, congratulations on where you got to so far. It's been a real success story, Pilbara, and we look forward to seeing how this opportunity set plays out. It really is something that is clearly demonstrated is there, but it's about how it will play out, and we all watch with real enthusiasm.
Thank you, Tim. Thanks for the opportunity, and thank you to Euros Hartleys, who have been supporters of Pilbara right from the start and along that whole journey. So we certainly pride that relationship, and thank you to the many shareholders whom are connected, who've rode this roller coaster journey and during those dark moments and challenges, many of which would reach out and say, keep going, you'll be right. So thank you to them.
Oh, good on you, Dale. Well, look, on behalf of all of us at Euros Hartleys Finding the Front, thanks again, mate, and we look forward to catching up again.
Thank you. Cheers.
Cheers.
Thanks for listening to Euros Hartleys Finding the Front. This podcast is for general information purposes only. Please check out euroshartleys.com for more information. Euros Hartleys holds Australian Financial Services Licence 230052.